Hello, this is Hajan Lee. I wanted to put out another tutorial video on Elliott wave analysis, and this one is going to focus on the triangle type of correction. In the tutorial video number 2, we had covered the zigzag and the flat, the 535 and the 335 correction types. And then the third type is called the triangles. So here you can see I'm borrowing this from somebody. Let me give the credit where the credit is due. Someone wrote an article, Amazon price check for fake traders BS analysis and Elliott waves. I haven't read the book. I just wanted to borrow this chart, which it comes out of the book that you should have already. I have the I got also not too long ago the Kindle version, but I found it better on a search. Now, triangle chart can be explained, of course, by the pattern. Okay, so I just want to go over these patterns. This is a converging pattern, and the converging pattern is, or contracting pattern rather. And in a bull market, a contracting pattern, usually prices coming up. Then the first jab down is A, B, C, D, E, and then the E wave sits on the bottom line of the triangle. And when that happens, price tends to rise. In a bear market, when the price is coming down, first jab up is A, B, C, D, E. The E wave is sitting on top, and price is portended to be continued down. These are what it's a consolidation pattern. Notice how also the A, B, C, D, E's are 3, 3, 3, 3, 3. They're all threes. If you have 1, 2, 3, 4, 5, 3, 1, 2, 3, 4, 5, 3, that's not it. It has to have a 3. Now he calls this the barrier, but I call this the ascending and the descending right triangles. And if you've watched my analysis long enough, you've seen these patterns, both this, this, and this. The ascending right triangle. The light cone analysis that I did yesterday was exactly this. We'll get back to that. And then the descending right triangle, which is bearish. And again, it's 3, 3, 3, 3, 3. Same here. And again, the E wave on a bullish one sits on the bottom of the line of the triangle. And on a bearish one, it sits on the right top of the descending right triangle. And you've seen this constantly. The broadening pattern is what I call the jaws of wealth lately. Now, in a expanding or broadening pattern, when the price is here on the bottom, or on the bottom here, it's bullish. When the price is sitting on the top of BD, it's not bullish. The jaws of wealth that I've been presenting have prices on the bottom, which is why I call it the jaws of wealth. Now, when it's sitting on the top, I call it the jaws of death on a bearish decline. So once all of these jaws of wealth make it up all the way to the trend line up here, I'm going to start calling it the jaws of death. And the more I see it, I think the pattern that you see in the altcoins will ultimately indicate the true top of a Bitcoin. So when I see the broadening patterns of altcoins and all of the prices are here or in excess of it, it might indicate maybe the whole market is quite near or top. That's something that I'll present on a more of a big picture assessment. So again, these are the variations of the Elliott wave triangles. And let me get to some of the examples. Hold on. By the way, this is BTS. Look at the one. Look at this one. Sorry to digress, but this is getting exciting. Hold on. I'd be curious if that neckline gets breached. Then we can maybe see 21 cents. Anyway, sorry. This is a tutorial. Let's go to Bitcoin. All right, so here is clearly a correction that's in progress. And this correction, so 1, 2, 3, 4, 5, has 5 impulse correction and something and another impulse is on its way. It obviously impulsed up here. This is an ABC correction. Can you spot the ascending right triangle? The best way to do it is to start drawing lines. Like this. And then maybe a line across like that. So you have a horizontal line and you have a rising line. So that gives you a right triangle. And the label of the A, B, C, D, E can be positioned like this. A, B, C, D, E. And it's already broken up words. And it's already $76. Yesterday it was underneath when I recommended this. Here's what I put out yesterday, 20 hours ago. Boom. Look at this. A, B, C, D, E. It was underneath the line. By using this, knowing how this triangle goes on a bull run, on an uptrend, it's a consolidation phase. A, B, C, D, E. Sitting here, I knew that the next wave will be breaching the upper horizontal line. And I had then set a target of 114.72 by drawing a line that's parallel to the rising line. And at the apex, where the two lines cross, I then draw a vertical line until it meets the parallel line. And I read the price of that, which is 114.72. This is a true application, real life application of it. And it's actually now. So yesterday was 67.20 at the time of the posting. And one thing that Elliott Wave didn't talk about in that diagram I showed is a volume confirmation, which I will also get into. So it was 67.20 and it went as high as 76 or 77. That's 76.94. Not too shabby. And the target is what? 114. Pretty cool. Now I also want to talk about volume. Volume should be declining into this. And then with the breakout or close to it, you should see an increase in volume. I haven't seen much of descending right triangles so far, so I am not able to find an actual example of that. However, on the cryptos, I can give you on the equities. So hold on a second. So here it is. This is something that I did by image search on Google. So here is the price where you see a lot of overlapping corrections going on. And you draw the line across the bottom and the tops of the prices. And on the descending one, the bottom line is horizontal. And the top line of the triangle is downward angled. If you draw a line, vertical line here, it's a right triangle. That's why it's a descending right triangle, and it is bearish, as you could tell. Boom, broke down below, breached below the horizontal bottom line of the triangle. And this probably would have gone lower too. Here's a bearish flag. Kaboom, down. From an Elliott, so here's a chart pattern. Now, from an Elliott wave perspective, this is clearly a correction. In this case, I would not label this as an ABCDE, but rather I would label it as WXY type of a correction. Or I could say ABCDE WX. I'm sorry, ABCDE WX and Y. So it could be a combination type, but I wouldn't label this straight out as a as a ABCDE. That wouldn't fit. But still, the pattern of this descending right triangle is quite evident. Here's another example. Oops. You can draw a line across the bottoms of the price and the tops. Now in this case, if I did an Elliott wave count, A, B, C, D, E, the E will be sitting in the bottom of the line. Then I would say this is going to potentially rise as well. So it could be a moment of indecision. Like this. A, B, C, D, E, and it'll rise. Okay. Now in the triangle type, like from here, if you see this, okay, if you just take this is WXY, let's say. So you're saying WXY, WXY, continuation of that whole triangle, other complex one up. Now with triangles, you can also look for fractals as well. And because they're so similar in shape, you can look for the fractals. But not every one of them will count as ABCDE. That's what I'm trying to say. Not every triangle will follow ABCDE. This is just when you're trying to combine Elliott waves with it. So here, A, B, C, and you're stuck. Now, if you broaden, this, it could potentially work. A, B, C, D, E. Okay. Now, in this case, it wouldn't work. This is just an ABC, ABC, so 3 waves. But from a fractal perspective, it could work. But this fractal of this is not really much of a fractal to that. It's more closely related to this one, I think. Here's another example of an ascending right triangle right here. Okay. Notice how this is not exactly perfect in touching the bottom line. That's okay. Nothing is perfect here. Some are real true vintage classic shapes. And notice how the price broke out. So A, B, C, D, E, poof. I've shown this before in past blogs of Ethereum. A, B, C, D, E. Now these are contracting triangles, right? But you're getting A, B, C, D, E. That's why I'm calling for an upside here. It's very uncanny. The only thing that bothers me here is the volume is increasing. Usually volume should be decreasing. But this is a very nice ABCDE contracting triangle. Now I've shown this very often, and this is a symmetrical triangle that's downward pointing, like this. And these are not necessarily ABCDE. So not every triangle has to have ABCDE. It can't. Elliott wave can't take all the credit for patterns. That's why I combined the two. This is an ABC correction. There's no ABCDE here. But look at the triangle, how it's downward pointing. This too is a correction. Elliott waves would not label this as ABCDE. So when I'm combining this, I'm calling this ABC, not ABCD. Forgot to change that. I'm calling this ABC. There. Third time's a charm. A, B, C. So you might be saying, why is the B here and not here? Shouldn't the B be here? Well, let's go a little further in. If this is A, okay, then what I can do is that I can say this triangle here itself is a pattern that produces B like this. A, B, C, D, one way. Oops. B, C, D. Sorry. Come on. A, B, C, D, E. And that'll break down. So it's a triangle within an ABC combination. And all of that this was down, so the first stab bob is the A. That's what even I get that confused a little bit. So I have to try a couple of times. So within this larger triangle of ABC, you can have embedded triangles. And that's called a combination. When you get a big mess of overlapping like this stuff over correction, usually there are triangles embedded. You can look for that. But this is a very bullish pattern. The reason is everything is pointing downwards. And the closer the price comes to this apex point, the point where the two lines of the triangle cross, the more energy it'll have to burst out. Here's another triangle right here, which is not going to be labeled as ABCDE. Now, the book that I recommend in the Technical Analysis and Trends states that symmetrical triangles are points of indecision. When you try to look at this from a buyer and supply side perspective, you're seeing that here the buyers are in control, and yet the sellers now gain the control. They're taking the price down. My remote computer. Taking the price down. Okay, but this is not ABCDE. And at this point, as it gets closer, this is a point of indecision. It could have gone down or up, and you don't know. If you're relying only on pattern, You don't know whether it's going to go up and down. When I was reading that book, I first started using just patterns only. Whenever I got this kind of symmetrical triangle, I would get out and just stand aside and watch. Now I combine it with Elliott waves like this. So let's say 1, 2, 3, 4, 5. So those are subwaves of 1, 2. Sorry. 1, 2, 3, 4, 5. So if I know that Elliott waves tells me that this is a 2, and I don't know, just by looking at the triangle only, I don't know whether it's going to go up or down, but Elliott waves tells me the probability is more on the upside. Because this is wave 1, that's the 5 waves here. This is ABC 3 wave-ish. 1, 2, 3, 4, 5. Boom. Do you see how now the pattern and Elliott wave combined together gives you additional confidence on the discerned pathway of place? And that's exactly what I'm doing when I do my analysis. And that gives you a multiple factor, a multiplier factor in the accuracy. I'll explain that again. When you use just symmetrical triangles only without the Elliott waves, these patterns represent a point of indecision. It could either go up or down. Let's say none of this price existed. But if I'm using my Elliott waves, I'm counting the waves here and I see 1, 2, 3, 4, 5. And I know I see 5 impulse waves. And if there are 5 impulse waves, I also know then that after 5 waves there has to be a correction. So I can count this as ABC, right? Just like this, ABC. And if I know this is, an ABC, then I know this, and this is 5 ABC, so 1, 2. Even though I have an indecisive symmetrical triangle pattern, the probability of it breaking out just got a lot higher. And I think that's very important for you to realize. That's the algorithm as to why. And you might say, well, then why not just use Elliott waves only? There are situations of the reverse of that. When Elliott waves could be indecisive, but the pattern will resolve it for you. Okay? But more often than not, Elliott waves does resolve the pattern to give that much more confidence. So here is Zek, the jaws of wealth, right? So this has a lot to go from A, B, C, D, E. So this is, you can say A, B, C, let me label it. A, B, C, D, E, what would be up there, let's say. This is why I call this a jaws of wealth. Look at the potential. A, B, C, D, E. And once it gets there, what would I call this? The jaws of death. Okay. Once it's on top, I would then now call this the jaws of death. The yin and the yang. This is a beautiful ABCDE broadening pattern that could be in progress. So all the jaws of wealth that I've been pointing out is exactly this, the broadening ABCDEs, mostly. It won't and doesn't have to always count ABCDE. Here's the S&P 500. Now, that's what I think. You have A, B, C, D, E, and it failed. It didn't come back down, and it crushed it. It just crushed it. Touched this top and went up again. And this is why I think we are on a parabolic phase of the equities as well. I mean, from here, we're going to see never mind 2,500, but 5,200 potentially. This could go like not there, but like this. Until maybe the middle of 2019. That'll be very interesting. We'll be in another secular bull market cycle. So, you know, you can do what you want, but I've got all my money in the equities for the cash funds. Okay, so we're back to here. We showed the contracting. We showed the ascending. I couldn't find an example of descending, but I showed it to you on the images, and then the expanding as well. But again, what's really important is to see if you can combine pattern with Elliott waves to get the resolutions to enhance your probability of finding the right direction of the price. That's where the bottom line really lies. I hope this has been helpful. Let me know if you have any questions. And next tutorial, I will do combination and complex corrections.